What is going on, everybody? Welcome back to the channel. And in today's video, I want to answer a question that I get asked constantly on my live streams, and that is, Frankie Candles, where the heck do I take profits on my trades? So in today's video, I want to talk about where you should generally be taking profits, some tools and techniques that I personally use in my strategy, not only to protect my capital, locking in gains, guaranteeing winning trades, even if price goes against me, but also how I can capitalize in case price gets a bigger move than I expected. That way I can let my winners run. So buckle up, Mafia. This is going to be a good one. And without further ado, let's go ahead, jump on into the charts, and see if I can help you guys lock in profits so you don't hold your trades until they eventually turn around and stop you out at a loss. Let's get into it. So guys, before we get into the actual tutorial, I want to talk about where you should generally be taking profits, and it all starts with a trading plan. Now, once you have your trading plan in place, the places you're going to want to take profit is pretty simple, and it's areas that you know have a high likelihood of giving price a rejection or a bounce if you're in a short position. So you want to find those high probability levels that you know price is going to react off of, and if you're in a long position, it's going to be key levels of resistance, because if you come up to that resistance level, you don't know if you're going to be able to get above it, but what you can anticipate as a likely outcome is you will get some kind of reaction with the possibility of a reversal. So at these levels, you're going to want to shave a little bit of your money off the trade, and for me, I like to move my stop loss into profit after I take my first take profit. That way, if price does go against me and it stops me out, I simply get stopped out in profit, locking in a guaranteed winning trade. Now, you can use many different tools to do this. You can use Fibonacci levels, moving averages, traditional support and resistance levels, and my favorite, volume profiles, because not only does a volume profile help you know where to take profit, but it also gives you a clear trading plan. So in this video, I'm going to specifically focus on volume profiles and Fibonacci levels, because this is typically what I like to use, and I think it can really help the Mafia increase their profitability and help you guys lock in those guaranteed winning trades. So guys, for this trade, this is what the market looked like. We're here in bar replay mode, and as we had a loss of this value area low, we got a big drop to the downside, which is generally not where we like to get overly bearish, contrary to what most new traders will think. As we break down below this resistance, this is typically where I'm looking for long positions. If you guys want to know more about my trading strategies, definitely make sure you subscribe to the channel, because there are a ton of free tutorials, and we will be continuing to release more, showing you guys how I like to get into my trades. But generally speaking, as price loses these volume profiles, I do like to look for long positions, and what happens here is price winds up getting a bounce, as we would expect, as we had some key levels down here. But as price starts to reverse, showing signs of strength, I now have this volume profile ahead of me, which literally gives me a blueprint to any trades that I want to enter, at least long positions. It gives you those key levels on where you should be looking to take profit, because based on the laws of the volume profile, what we would be expecting here is once you get above this value area low, we know that the next likely place for price to go is going to be that POC, and then eventually the value area high. Once you break that POC, the next likely place for price to go at that point would be the value area high, and you can see this is the beginning of a trading plan. So again, this is not a tutorial on entry, so I'm not going to talk about the actual setup that we took in the premium Discord. However, the idea here was that we were looking for long positions in anticipation of getting back into the range, going to the POC, and then going to the value area high. And as we know, the POC is the area where the most volume was transacted, making it not only act as a magnet, but also an extremely key level of resistance. So in my trading strategy, the POC, as long as it is residing in the middle of the range, is typically the first place I like to take some money off the table. Now, this plan may change a little bit if I had a little bit of a lower entry. If I were able to snipe an entry at the bottom right where we bounced here, that would give us about an 11% move to the value area low, and in this case, this is plenty of a move for me to lock in some profits, which would change my first take profit from the POC down to the value area low. But for this specific setup, we wound up getting in pretty close to the value area low, so I didn't take profit there. In turn, I waited to flip this value area low to support, and I looked to take profit at that POC. So I believe our entry was somewhere within here. I don't remember the exact dollar amount, but my trading plan looked a little something like this. We found our entry, and now we're looking for price to get above that value area low, go to the POC, and hopefully the value area high. So that would make my take profit TP1, the POC, and it would make my take profit 2 the value area high. So I believe my entry on this trade was just below here where we came up and made a higher low. I decided to take an aggressive entry there, and as you guys can see, we now have a clear trading plan saying if we do wind up getting above that value area low, I'm willing to hold this trade up to the POC because I know that POC is going to act as a magnet, and then that's where I'll take profit 1. And more often than not, guys, once I hit that TP1, I will move my stop loss to entry, and this is the key to locking in a guaranteed winning trade. Because if we do wind up coming up to the POC and we wind up getting some kind of harsh rejection and the trade goes against us, we will get stopped out in profit, locking in guaranteed money. And this is a beautiful situation to be in because once you have that stop loss moved into profit, you can sleep soundly at night knowing that if the market goes crazy and goes against you and does something you don't expect, you're still at least going to lock in a little bit of profit. And this will help you consistently grow your accounts over time. And I want you guys to understand something. This has nothing to do with finding sniper entries. This has all to do with risk management and just trade management in general. So if we wind up moving price forward here a little bit, you can see price breaks above the value area low and we head straight for that POC. We just front run it a little bit and then boom, we do wind up taking it. So that would be a take profit 1 for me. Moving that stop loss to break even, again, guaranteeing that winning trade because if it goes against us, it'll stop us out at break even. But we already locked in that profit at take profit 1. So we come in, grab that money. If price goes against us, at least we get to keep that first TP. And at this point, we are simply in a risk-free, guaranteed winning trade, which again is an absolutely beautiful situation to be in. Now at this point, all we're waiting for is a flip of support on that POC to get that next likely move up to the value area high. Now a little tip here for you guys. Typically, when I am looking to take profit at a level, I will drop my take profit just below the level in case we do wind up coming up and front running it slightly. We'll still be able to grab that TP because sometimes price will come up and front run a level just slightly. It's honestly not that common with a volume profile. However, I do like to do it just to be a little bit conservative. We're not trying to be greedy here. And always remember, bulls make money, bears make money, but pigs and hogs get slaughtered. So I do like to front run those TPs just a little bit. But at this point, I am simply in a guaranteed winning trade. And then we wait for price to hopefully flip that POC and get that move up to the value area high. And you can see it does get a little squirrely around here at that POC. As expected, it is a key level of resistance. And we don't know if we're going to rip down from here and absolutely get stopped out. But obviously, for this trade, we do know this. We're in bar replay mode. This did wind up playing out to the final TP, which is take profit 2. And this brings me to my next question that I get asked constantly, and that is, how much should I be taking off at each take profit? And the answer to this is somewhat subjective, guys. I typically take between 20 and 30% off at each TP, but this does change depending on the context of the trade and what price action actually looks like as we interact with these levels. So if we're sitting here at the value area high and things look absolutely bullish, money flow is coming up and all that good stuff, I may actually take a little bit less profit off, holding a bigger position for an eventual breakout. But for a general rule of thumb, I would be taking about 20 to 30% at the TP1 or the POC, and then I would take another 20 to 30% at the value area high. And then at that point, you can even move your stop loss up even higher, protecting yourself further and locking in even more guaranteed winning gains if you wind up reversing from the value area high, which obviously we do know this is typically where we look for short positions, because once you deviate above that high, you're looking to get stuck back into the range, go to the POC, and then back down to the value area low. But price is not going to range forever, and we don't know if this is going to be the breakout or not. We could do some analysis to try to get an idea, but we want to protect ourselves regardless. So that's where maybe we're 60% out of the trade, maybe we're 50% out of the trade. Again, this is going to change depending on each position, but we can then hold that guaranteed winning trade, and if price absolutely skyrockets, we will hold that moon bag, and at the end of the day, we will essentially be long from the low of this range all the way up into new prices. This is the exact situation I'm in for a long position that I am still holding from down here in January at about $40,000. It is a very similar setup. We came on down to this value area low of the range, deviated. I found my long entry. The initial plan for that trade was very similar to the example I'm showing you right now, but the plan here was to get above that value area low, go to the POC, and eventually the value area high, which you can see did happen. But at this point, I closed out some of the trade, and I decided to hold a good portion of it based on the bullish signs on the higher time frames for a likely continuation up. And what happened? We absolutely blasted off for another leg up, and then we actually consolidated again, where you almost had the exact same setup, where you have a volume profile, you deviate from the low, could have found a long position, and then boom, you absolutely slap back to the upside. I was still holding the long from 40K, and that trade is now up absolutely massively as we wound up getting that big leg up to $74,000. And people always ask me, Frankie, how are you always long from the bottom? And it has everything to do with my trading plan and my risk management. I wasn't necessarily guaranteeing to myself, I'm going to long 40K here and look for 74K to come in, but I used the trading plan based off the volume profile to give me a high likelihood trade, and then I held a portion of it to give me that surprise grand slam trade. And what wound up actually happening in this particular setup was we did come up to the value area high. We wound up getting some turbulence. We came down to the POC. I was still holding a portion of the trade at this point. And then as we came up here for a second test of the value area high, we did get some bearish signals. Price decided to get accepted back into the range. And at that point, we were looking down to the POC in the value area low, where I simply got stopped out in profit, locking in my gains. And we also were able to find a beautiful short entry from the top of the range here, allowing us to long the bottom of the range as well as short the top of the range for a move all the way back down to the POC, as you would expect. And eventually we stuck to that POC, but we wound up, as expected, getting a move back down to that value area low. And right now we may be setting up for another rotation of this volume profile. I'm actually not very hopeful in this particular case, but this is just kind of the basics and where I like to take profit. And again, the volume profiles help so much because not only do they give you the high likelihood areas where price will reject, but it also gives you that beautiful little trading plan. So just to recap really quickly, guys, before I let you go, in general, when we enter trades based on the volume profile, that TP1 is going to generally be taking at the POC of the range, again, assuming it is in the middle. And then the anticipation is to hold another portion of that trade up to the value area high, where you can simply close your position in full, accepting that you caught a really nice long position. But if you want to hold on to a moon bag for that potential grand slam, like I did at 40K, you can simply move your stop loss into profit. And in this case, I'd probably have it just below the POC. Now you have two take profits locked in. You're holding a small moon bag for that potential breakout. But if price goes against you, you come down, stop out in profit for a guaranteed winning trade. And very likely, often in the premium Discord, we are short then from the top with the same exact plan in place. So not only do we get stopped out in profit, but we also have shorts that are now deep in profit as well. And these are some of the techniques and strategies that I like to use to lock in my profits while also keeping that opportunity open to get the bigger move. Now, again, guys, I do use the volume profiles very often, but another thing we can use is the Fibonacci retracement level, a little bit of a bonus tip here. Now, for this long position, I'm going to come back in bar replay mode before we round up getting the crash down. But for this particular situation on this trade, guys, if you were using the Fibonacci retracement, it will give you usually very similar levels that the volume profile will give you. But in this specific case, if I were looking for an entry all the way down here like we were, you can simply pull your Fibonacci retracement from the swing high all the way down to the low that you have made. And these golden pocket and 786 retracement levels are typically what I like to use. And the reason for this is because if the downtrend is going to continue, we know that the golden pocket 786 retracement levels are oftentimes an area where price will put in a lower high and continue the move to the downside if that's what the market gives us. So once you get up into this zone, it may not be a bad place at the golden pocket to take a TP1 and then see if you could go up for that 786. But very often, guys, the golden pocket in a situation like this will be very close to the POC, as the 786 will likely be very close to your value area high. But if you're not a volume profile person, you could easily use the Fibonacci retracement levels, because if I get rid of the volume profile and we play price forward here, you guys can see that we do wind up getting that golden pocket retracement. Eventually, speed price up here just a little bit. You could see, and what happened at that golden pocket, although we didn't get a full rejection, we did get turbulence, right? And we don't know as traders, there's no way to guarantee if that's going to be the big drop. So you could take a TP1 at the golden pocket and then look for a move to the 786. And in this case, even if you were looking at the Fibonacci levels, it was pretty clear that once we got stuck back underneath that 786, it was going to be a bigger move to the downside. Once we came up and tested it one last time, we lost it. and then bada boom, you get the reversal. And in hindsight, you look back and you say, hey, what happened here? It's like, well, hey, we got to move to the upside. We rejected the golden pocket 786, which is the golden zone, in my opinion, for a reversal within a trend. And you come up, you play around with these levels, you absolutely lose it, and then you dump to the downside. The beautiful thing, guys, is the fixed range volume profile and the Fibonacci retracement tools are absolutely free on TradingView, so there's no barrier to entry. And I know sometimes the fixed range volume profiles aren't available for the free versions of TradingView. I don't think, but if not, you could check out my free indicator that's also available on TradingView called Frankie Candles Essentials in collaboration with LuxAlgo. Shout out to LuxAlgo. It's 100% free. It's a fixed range volume profile, and you guys could use it right now with absolutely no strings attached. So trying to give out all those free resources for the Mafia to help increase your profitability and grow your accounts over time. So with all that being said, guys, hopefully that helps you guys understand at least the basics of where you should be taking profit, again, at those key levels of resistance where you know there's a high likelihood of a reversal. And now you guys have a little bit of insight into the actual strategies and techniques that I use in my personal trading plan, how I manage my trades, while also keeping the opportunity to let our winners run if we get that breakout and the continuation in the direction that we were trading. So with all that being said, guys, that's all the time I got for today's tutorial. Hopefully this helps you guys out. So go hit the charts, pull out those Fibonacci retracements, get into bar replay mode, put in the hours, and test these strategies. And then you can start to add your own little sauce into these strategies so it fits your trading style and your personality perfectly. So get out there, guys, and start making money and locking in those guaranteed wins. And with all that being said, that's all the time I got for today's video. I'll see you in the next one. Frankie Candles out.
Here we go. At the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand.